Good afternoon, everybody. This is Dan Hussey with AlgoDayTrader.com, bringing you our July 12th, 2013 week-ending NYSE session recap. Let's begin with the S&P 500. We have traded now up into a new high here. We need to adjust all of our, polls here. Specifically, I'm looking for a 1663 support going into next week. Below that we have a 52 half, and then below that we have the all the way halfway back down at 1613. Not much to talk about here. Everything ended the day bullish. We ended the day with bullish divergence. Our high in the tick was at 1448. I'm sorry, 45, which we definitely went through that high, albeit by a point, but still. The low in the tick was basically the low for the day. Bank rallied all day, and you can see how the S&P, the purple line here, eventually caught up with Bank, as it usually does, that divergence. And that's why we watch Bank as a kind of a leading indicator for the market. Aussie yen sold off and closed at lows here. We're watching micro 15-minute extension shorts, all in the direction of the much larger 4-hour extension short, drawn from a 96.05 anchor to the lows at an 88.95. Keep in mind this is all against the very large full next in the series long, drawn from a 72 to the 105.45 highs. So this this long has not traded yet. It came really close. We still front ran it by 20 pips here. This is a big daily chart. So as soon as this series of shorts breaks and we have traded into this long, that's when we'll have a confirmation of the low and we can get long the Aussie yen. Before that, it's quite risky to be a swing trade and try to buy this because the shorts have gotten participation. They are in multiple series, multiple time frames. Particularly this is very constructive short side. This is the third in the series measured move. We could trade up into in the 90.40s. So I've got resistance here at 90.10, which is what held today, 90.40, and then a 91.40 are our resistance areas. Of course, the 92.50s is the big 4-hour extension short, but these are the resistance areas before it. Those setups are what will take us down into fill the long, the big long, and potentially to an 89.30 target on the Aussie yen. The dollar yen. The dollar yen is actually today we traded a full long off of lows. We also traded the next in the series short, defended at 61.8 line, which had traded prior. So from an hourly standpoint, we're not really sure what's going to happen, right? If we go out to our daily chart, however, it's what I want to point out is that we've broken both the 61.8 line of the extension long and the 61.8 line of the ambush short. So there's a very large good potential that in this purple area, we're going to continue consolidation between the 250s and the 261.8 lines in some kind of wedging pattern at highs. We'll potentially flag on a daily time frame at highs. It's going to be really important to see what happens at 97.60s to see if we get picked up from there. If we do, then the ambush long here will have held after the short broke, and this we'll consider trading the 61.8 line, even though it did dip in a little bit. So, excuse me, fully anticipating trading to 97.60s. I wouldn't take this because this is the third, could be the third or the confirmation leg in a range or a wedge pattern. First leg down, second leg up, both breaking 61.8 lines, and the third leg down to a 96 area here would be a confirmation if we get support there of a wedge. And we'd look for some kind of 5 waves if you're an Elliott wave person. That's how I determine wedges using fibs here. Of course, that is considered a triangle. It could be the start of a triangle in Elliott wave, but nevertheless, we've gotten reaction from both sides here today, consolidated between these two support levels, and it's really going to be interesting to see which one breaks first. We very well could trade up into a full short up to the 99, 90 level, but I'm more interested. I'm more interested to see if this next in the series short continues, takes us down to 97.60s at least. because we are in the next in series short. We have an ambush long potentially there, so we have fib confluence down here at these 97.70. Whoopsie, 97.75, 97. Down here, 97.60 to 97.80 area, and it'll be really interesting to see if support does hold there. If not, we're going to be looking for a retest of the 96 level and a potential confirmation of that wedge, the third leg of the wedge. Okay. The euro dollar got awfully choppy today. It was pretty clearly just a range day from yesterday. We have a full short off of our most recent highs that is held that would take us down and into and actually dip us probably into what is an ambush long. Stepping out to a daily time frame, we have broken full shorts off highs. We've broken full longs off lows here. And the only thing we really see ourselves in, stepping out to a weekly time frame now, there is a full, I guess, halfway back short, a full long, and then most importantly is from about the all-time lows, about an 83, I think it was. Close enough to all-time highs, which is at a 63, something like that. Something in that area. We have flagged and held the major lows, which come in. This isn't right because it should be, whatever the pull is, it's right around 121.12. 121.20, that's good enough. This is where there's a major support level we're coming off of that has held for multiple years now. It's the all the way halfway back long in the euro that does have targets to the upside of like 178-ish. Anyway, that's the longer time frame. We're more concerned about what's going on this 15-minute chart, and there is one glimmer of hope here at the 29.80s for an ambush long on the euro. This level, excuse me, I would like to see us trade into the 131.30s to break this full short off highs first, and then if we traded down into the 129.80s, I might give this a shot. It's only 60 pips risk for potentially a very large swing trade, so I might give this one a go. I haven't really decided yet. Ups in terms of gaps on the euro, if it's going to be a big gap, 60 points to the upside to break this short could occur, and we could always gap, almost 100 pips to the downside, but more than likely we won't do anything in the euro at all, and we'll just open right where we close. So I am kind of looking for this to trade up into that area, break this short, and then maybe trade down into the 129.80s. A little bit of my Elliott wave background is telling me we got a clear three-wave structure down, and then what looks like an A, B, potentially C wave of a flat. And then if we got a C wave down after that, that would be a great indicator to be a buyer at the 29.80s. Of course, I'm not buying that based on Elliott wave. I'm buying that based on this is an ambush setup. Elliott wave is just one thing that we can add to the setup to kind of make you feel more comfortable with it, but it's not what I use to trade. Elliott wave's pretty much only good for explaining markets in like terms to people. Okay, so 29.80 support. See what happens there. If it breaks, again, I would hate to see it break, but it very well could, because all we've done this year in the euro is break both sides setups and continue in a larger range. The Aussie US dollar, going out to a 4-hour chart here. Very important chart, very interesting dynamic. And should probably get rid of some of these smaller time frame stuff here. Go out to 4 hours here. There we go. So we from the 99.60 anchor, we've had need fib. There we go. The 99.60 anchor to anchor high. Well, it's an anchor. It's a low to low extension short. This extension is traded multiple times. You can see how it just stair-stepped down. The last time we actually traded this was down to the 93.25 lows. The exact low was a 93.26 on June 11th. So the 93.26 low, we traded down to and now through targets. We have not traded, I repeat, we have not traded into the same anchor new low after hitting those targets. So we still need to drag that all the way down. So we do have a resistance level, a very large extension resistance at a 94.77. If this market were to really just short squeeze straight up into that level, it's actually a level I would take. However, that's not the case right now. What we're watching is some other level trading us down to and through the prior trade's targets. Okay, we're reverse engineering the extension drawn from a 95.30 anchor to lows here, traded once to target, same anchor, new low, traded again to target. This is where things are going to get tricky with the extension. That means I have marked, and I've marked, and it's purple. I'm going to actually make it blue so you can see it. I have marked our prior lows, the lows that the last true, hourly or 4-hourly extension short traded from. Right, that's right here. Those lows, last time this extension short traded, we are taking it lows to lows. I've marked it because we have not traded into this level. We are continuing lower. And if we continue lower, we're going to, again, look for a new extension from the 23 or 93.26 anchor to lows here. It could even start now. Just because we've made a new low, it could rally up into this brand new 4-hour extension short. It could do that. We could rally up into the 91.60s and be in a short. That's very plausible. Okay, so I'm actually going to put that on the chart right now. We know we're in this purple trade that could take us down into lows here. And if you notice, what's important here is that if I draw back up this original extension short that took us down to these levels, the secondary target, the negative 61.8 line, which is an indicator if the market reaches that level before trading into the next in the series. If it reaches the 61.8, the 161.8 extension / negative 61.8 target, which is what is down here, which is also the target for the current purple short we're in, reaching that level is like kind of the indicator that you look for an extension short at that point. It's just if the market blows through targets and hits that level, that's sometimes the level that turns over. Actually, more times than not, it's the level that turns over and pulls into a brand new extension. So we don't have to go much lower in the Aussie dollar for that to occur, but it's the 89.20s, okay, and that's what we're looking at as potentially the potential downside target here. Okay, if there's going to be a really big gap, we're going to gap down to that level, or we're going to gap up to the 91.60s area. I am doubtful of any gap at all. Going down to a 5-minute chart, however, 5-minute chart. We are currently flagging inside of an extension short that is traded to its 61.8 line. All right, and that extension is drawn from a 91.20, and we are against that. There is a long against that drawn from anchor, highs to lows here. So if the market considered this, if the algos thought this extension short is broken, they've already traded their long. Okay, so just in the short term here, I can make a very good case for smaller gaps where we can either gap up to the 90.90 area or down to the 90.30. Okay. Of course, there's always the best chance that we're not going to gap at all. Okay. So that's what I'm seeing in the Aussie dollar. There's a short term. It could go either way. Larger time frame. We're looking for it to actually trade lower. We're not short, but we're looking for it to trade lower, and in doing so, will potentially give us a brand new extension short. Okay. All right, everybody. That's all I've got for you today. Have a great day. Have a great weekend, and we'll be back with you as price action develops.